helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at tokenmetrics.com.
Hi, everybody. We are live. Welcome to the Token Metrics Thursday live stream. I'm your host, Bill Noble. If you need a roadmap in crypto and you need money, then like and subscribe to this channel because our sponsor, tokenmetrics.com, has the best dashboard in crypto. I'm joined by my colleagues, Forrest, Mehdi, and Micheal, Team Token Metrics. Gentlemen, how you doing?
Great. Doing good.
All right. It's always good to be with you guys. Always good. Now, let's go over what we're going to talk about today. We're going to help show you some of the things that we've helped our customers with as to how to make money in this environment, whether it's going up or whether it's going down. So stay with us for the presentations later on as to how to do things like set up an Avalanche wallet. Wondering how to do that? Want in? Stay with us. Now, without further ado, let's do your market update. Hide and seek, not hide and seek, hide and then seek for opportunities. Now, let's go over what we've been telling people for a while. Bitcoin, there was resistance again line at 66K. I'm going to change how I'm talking about Bitcoin, right? I'm going to talk about it as like, what's the worst case scenario, right? In other words, if it goes down today, and then let's just say there's a flash wick down on Friday or Saturday night, right? Because we've seen this before where, you know, in a bull market, it's correcting, and then they do this flash crash while everyone's sleeping on a weekend. All right, I'll go into more as to why I think this weekend is important, but kind of the bottom line is worst case scenario, I think, is like 48K, right? And that may not even happen, but if there's a flash crash over the weekend to conclude this correction, that would be the level I'm looking at. Now let's talk about ETH. ETH is now a little bit more complicated than it used to be. This crypto tax regulation is going to basically hurt or borderline destroy DeFi 1.0 tokens. Now, is that going to hurt ETH? I don't know. Maybe in the short term, right? Because I don't think the SEC is coming in before Thanksgiving. But if ETH is trading below 4,200, you know, kind of maybe worst case for this week might be a wick down to the 100-day moving average, okay, and big fib number right around 3,600. So if you want to hide now and seek later, you'd be seeking ETH at 3,600 if they take it below 4,200 and leave it there. So it's hard to tell right this second, okay, Thursday, November 18th, right in the middle of the day. It's tough to tell whether this is like, you know, they make it look terrible before they take it back up, or whether this thing's really going to unload to the downside. So if you're watching this next week or you're watching this later, 3,600 is the level I'm looking at on like a worst case scenario for this week. Now let's talk about something slightly more positive. Total crypto market cap has got really good support at about 2.6 trillion. So the overall crypto market may have support led by Bitcoin and ETH just below where it is now. That said, the green line is the 21-day exponential moving averages. Obviously, I'm playing around with moving averages, mixing and matching like you would, you know, sort of like different flavored coffee creamers in your coffee. Lately, I'm showing that when this thing breaks below its 21-day EMA, it can have a nasty effect, right? You know, in the spring, in the summer, there was a bigger crash. In September, it was, the market got wrecked, but it wasn't a disaster. And I'm thinking this might be a case where they test that 2.6 trillion level after breaking the moving average, possibly wick below it. And that's hopefully it. Now, focusing in on the timing, okay? So I call this the crystal ball element. I always tell people there's no crystal ball, but I try anyway. So recently, we've been pounding the table that trends last about 45 days, corrections last anywhere from 9 to 13, and bigger parabolic moves can last over 20 days. Based on these estimates as to when the market topped, we should see some type of bottom or flash event to bring this to a close around November 21st or sometime before the U.S. Thanksgiving Day holiday on the 25th. In other words, hide for now and seek for buying opportunities if it goes down into the end of this week. There's going to be a chance to do holiday shopping. The only question remaining is how big could the ensuing rally be? And new for crypto, old for equities, but new for crypto, what sectors within crypto could go parabolic? Does the whole market go parabolic? Or is it going to be just certain sectors that people don't own? In other words, under-owned coins and under-owned themes may be the thing that you're seeking for while you're hiding today. Now, Avalanche. We've been pounding the table on this. There's 6 different reasons why Avalanche is great. I'm going to let my colleagues develop that theme. As I'm sure you've known, okay, Avalanche has been sort of like the place everyone's been hiding. The coin's been rallying as the market has gone sideways to lower. Why? Well, DeFi 1.0, the tokens related to DeFi 1.0 may be in serious trouble. They may be a flat out short. I got asked yesterday, if you had $50,000 and wanted to do a short play, what would you do? And I would say the DeFi perp futures contract. Why? Well, because Avalanche and Trader Joe is telling you that DeFi, along with Olympus and that whole trade, which we will tell you about later, stay tuned. Oh, and by the way, please hit the like button. I kind of had to give everybody a hard time yesterday about that. I would prefer not to, so please hit it. Back to Avalanche. Okay, Avalanche was outperforming the market. All right, and now I'm saying, what happens if there's a flash event? Where can I grab this? Because Avalanche may overtake Solana and be the big trade towards the end of the year. In other words, in 2017, ETH went from, 150 to 1,000. Now this year, rightly so, we maybe figured it was Solana. Now we're starting to believe it's Avalanche. So if Avalanche wicks down to 85, I know it's kind of far away from where the market is right now, but the dip buying mentality in Avalanche, you need to adopt that over the next 5 days, because if there is a parabolic run up, if it's not in the overall market, I still believe Avalanche has the potential to be a one coin market along with the metaverse. More on that in a second. Now, if Avalanche is not a one coin market, Binance coin may be a play, right? There was resistance at 675. I suggested that maybe this was the case, like a lot of other cryptos, where you want to buy a dip underneath resistance. Obviously, there's been quite the dip in Binance coin, but I would be very encouraged if there was a flash wick down in the market and Binance coin held 521. This is a very underrated layer one theme. People don't like it for reasons that they don't like it. But I'm very interested in it because if it ever took out 675, it could do what Avalanche did. Okay, it may not go up as much, but we've noticed that when these layer ones take out their support from back in May, they can run. And by the way, as you can see, Binance coin is probably the only big layer one-ish solution. It's really an exchange coin, but it's really one of the only big coins that never made a new high. So when they get done killing this market this week, this may be something to think about getting into. I'm looking at support at either 521 or say near 490 or 480. So they may have to run everybody's stops before they potentially take it back up. Now, Solana. Yesterday on the market update stream, I basically packed it in on hyper-focusing on a Gann line at 236, right? And I went with something that one of our colleagues told us wisely after the Solana conference, that there are some very big venture capitalists with some very big Solana bags. And they may be headed home because if you made money this year in crypto, okay, if you were long Solana at 20, I don't think I would blame you for taking that money and going home and enjoying the holidays. So that could mean there could be a flash wick down in Solana, possibly to 180, possibly lower. Now, if I'm wrong about that, which I'd be happy to be wrong about that, and there's like a future of gaming, some sort of metaverse theme that develops in Solana, then the way I want to do it is if it breaks above 280, go with that, right? You got paid to go with momentum in Solana. So don't catch the falling knife if you don't have to. 180 is support. But the way I think to play Solana is to go with any breakout. And if there's no breakout, then I think the trade is avalanche. Now let's talk about Near. I talked about Near. I said, okay, it's a good trade. Everyone thinks it's good. It couldn't get to support at $9. I discussed how, okay, a lot of times if something won't dip down to support, once it does get there, if it does, it usually goes through it. And I'm wondering if there's going to be a chance to pick up Near around 8. Very intriguing possibility that if you want to be long these layer ones for like a layer one metaverse, year-end rally, picking up Near between 8 and 9 is the way to go. Now, Polkadot, I definitely want to cry in my beer about this. I really did think this was going up. So I really want 38 to hold, but if there's a wick lower and everyone panics, you may get Polkadot at either 32 or even 27 if everyone panics, okay? Because I'm probably not the only one that thought this was going to the moon and beyond when it broke through 50. So you want to be able to take advantage of any potential despair. Realistically, what I'm hoping is that this thing just sort of chills out near 32 to 38. All right, now let's talk about the speculative trades that aren't working so we can talk about the speculative trades that either are working or will work. SHIB took out the 62% retracement of its recent parabolic up. That leads me to believe there's probably not going to be a new high in SHIB, and any speculative shockwave is probably not going to be in meme coins and probably in the metaverse. So, in other words, the easy money has been made and smart money has unloaded this on retail, and people are holding bags. So if you've got a bag or if you FOMO'd into this, figure out where your stop loss should be, because I think there's money to be made elsewhere. Now, let's go back to making money elsewhere. Believe it or not, crypto is becoming like equities. One thing that I'm getting our premium customers ready for, right? So this goes into how do you make money in crypto? Here's a new revolutionary idea. You might want to be long layer one and metaverse, or layer one ETH and metaverse, say, short DeFi 1.0. Okay, this is the DeFi perp futures contract. This regulatory problem is not going away. It may not show up at Christmas, but there may be tax loss selling in DeFi 1.0, right? That's your Uniswaps, your synthetics. So yes, money is pouring into Uni V3 pools. I've seen it. But what are the tokens worth? Do the tokens have upside if the SEC is sharpening its spears? So if you've got the capability, long metaverse, long ETH, short DeFi perp. If you look at this chart, right, when DeFi perp has gone through these fib circle lines, it kind of like goes up or goes sideways, and then it sort of goes straight down. Now, that's what's happening. Normally, I would say the third time around, the down move isn't as bad. This down move could be bad. Now, that doesn't say it's not going to, I don't know if it drags the whole market down, right, past Thanksgiving, but there could be an opportunity for a sustained short trade in this while, say, ETH and the metaverse go up. Oh, and NFT platforms, don't forget that. In other words, in equities, this happens all the time, sector rotation. But in crypto, we're used to everything going up, everything going down. There is evidence that that is changing, right? And I'm going to go with that story until it doesn't work anymore. Okay, here is a classic case of a coin that I couldn't stop loving and had to stop loving about a month ago. Synthetics, right? I'm always looking for the future of Wall Street on the blockchain. And synthetics, like, tried to go up in September and failed. And then it just died. Now, there is the idea of making a base. This doesn't feel like a base. This feels like up and then it's like slipping, like it's dead money. Now, I'm not picking on synthetics, but I am saying, you know, if you have to be short something or you want to protect yourself, you've got the ability to be short something, these are the coins to probably pick on. All right, friends, we're going to take a 2-minute break to just tell you, actually less than 2 minutes. Folks, like and subscribe to the channel. Please, we're doing a daily market update. That's about 30 to 45 minutes. So we're bringing you some serious premium content, and we're going to be changing the time that that content gets delivered. So you want to make sure you have alerts on so you see when we change it. At Token Metrics Inc. on Twitter, follow us so you can get all the information from the live streams. And I've already decided that I'm going to start making short videos with different backgrounds and sceneries talking about individual altcoins whenever possible. So we're going to try to keep everything on YouTube fresh. We're going to help keep you on path to making money in crypto because, as our sponsor, tokenmetrics.com, will say, we are a roadmap to making money in crypto. Now, thank you for listening to all that. And I'm not going to bust your chops about hitting the like button because I know you're going to do it anyway. So we're going to head right in to Altcoin Overtime. Okay, Alchemix had a chance to do something good, and it didn't. Why? Because DeFi could be in trouble. Okay, Alchemix was like, oh yeah, this is breaking out. This is the future of DeFi. And then it was like, damn. Okay, so I know people were trying to hang on in this. They maybe had bought it at higher levels. This is a false breakout, folks. This stuff is in trouble. Okay, now on to what's cheery. On to what's cheery. So this is time to get happy. Folks, maybe not on crash days, but as soon as the market starts crashing, all of this metaverse and NFT stuff, frankly, is going to just moon. That's my call between now and the end of the year. So honestly, I really don't care. Bitcoin at 65, Bitcoin at 47, Bitcoin at 75. Not to be a jerk, but who cares, right? The trade is in the metaverse and NFTs, and I'm saying that until I'm proven wrong. Network, if I get this right, support is at 387. Okay, this looks a lot like synthetics looked like back in 2020. A lot of these metaverse coins do. In other words, up, sideways, everyone gets bored, boom. I don't see any reason why coins like this, if 387 held on support 2 or 3 days ago, this thing could go to 6.8 or 10, right? You got to start using your imagination in more established metaverse coins that may be trading on KuCoin, right? Okay, Gala took out 17 cents, okay, like it wasn't even there. Next level is 35 cents, possible upside target 55 cents, okay? In other words, momentum trades are developing, even as the market is going down. So DeFi could go down and these type of coins could go up. Now, brief announcement as to where I learned all this. Back when oil was at 140 6 or 7 years ago, this was the case. Oil stocks, everything related to oil went straight up. Every stock of any company that had to consume oil, or retailers where you had consumers suddenly paying high gas prices, they went down. Never before seen in crypto, and it's here now. Okay, Epic, there is resistance at 84 cents. Okay, so I don't know that you FOMO into this unless it gets above 84 cents. But if it does, there's upside to $1.90 and $3. In other words, I want to start using my imagination as to what can happen in these coins, in these sectors, if there's a bottom, say on Friday or Saturday. My suspicion is that these coins may dip once or twice, and then they are gone. Okay, now if I'm wrong, use a stop. Okay, use a stop, right? In other words, it's not a bull market until you can buy a dip and make money. So if you can buy a dip and put a stock in and make money, you cut losers and add to winners. Okay, Ecomi, looking at 0.0075. It's tried twice to take out this level. The 21-day moving average it's like right there. And this coin has showed, I don't know, not much interest in being below its 21-day moving average, which leads me to believe there could be buyers out there. So if 0.0075 gets taken out, it could go to 0.013. In other words, hide and seek. What are we seeking? Well, we're seeking these small coins, right, in these favorable sectors that may be about to break out, that you may get a dip in, or F it, they may just break out while the rest of the market is getting hammered. Okay, Nord Finance. Okay, back to depressing, right? This is DeFi. Notice how it broke through its 21-day moving average around 473. It tried to rally above it and is failing. Okay, now I know that there are sectors of DeFi that are doing well. That's DeFi 2.0. Stay with us because our guys are going to show you how to make money in DeFi 2.0. So think about this stream, right? We're telling you DeFi 1.0 could be a short. We're telling you metaverse and NFTs could go much higher, like much, much, much higher. And we're going to show you how to make money in DeFi 2.0. Now, on that theme, okay, Olympus, I'm not sure whether technical analysis is a good thing or a bad thing, but that doesn't stop people from asking me about it anyway, right? So in the Olympus token, 763 is actually a very big fib number. And it stopped short of resistance up at 1440. Now, correct me if I'm wrong, my colleagues will later, but I believe I heard somebody say that this token provides a strong incentive to buy the dip. And just from a pure chart point of view, I find it interesting that they couldn't take it through 1440. So if this becomes DeFi, if this is in fact a bottom, okay, if there is another approach of 1440, no idea whether that's theoretically possible. But from a chart point of view, it pulled up short of resistance. So that could mean if, and that's the key word, folks, keyword, if it goes back up there, it could take it out. Okay, Spell. Spell is approaching the 62% retracement of its larger move up. Normally, if a coin is good, it will hold the 62% retracement on the way down. Again, not sure if technical analysis is appropriate for this coin. Doesn't stop me from thinking about at least whether or not it's good based on the chart. So it may not be good for predicting future direction, but I'm still interested in support in these coins. RMRK. Oh my God. RMRK.app has a video that one of our analysts played for our premium customers yesterday about how the metaverse works. Now, I've been pounding the table on the metaverse about buying the dip in the big coins. And when I saw this video, forget it. I am not going to shut up about it until I get proven wrong. Like when you see this video, you don't understand the metaverse, rmrk.app, I believe, and you'll get it. Meantime, this coin broke through 31. It's retracing. Now, if the market falls apart and this coin comes back above 31, I don't see any reason why, just as a momentum trade, it can't go to 49. Like, don't underestimate the year-end parabolic. A lot of people thought it was Bitcoin. I think it's this sector, okay? Ticker symbol SOL, all right? Came up, hit 236, came off. Now, it could flash crash back to $1.17, at which case you might go into BTFD mode, or it could stop if the decline is over today in the broader market and possibly take out 236. One thing I have seen in these type of coins, when they take out those red fib numbers, man, it goes up a lot. Sandbox is a great example of it. Okay, ticker symbol NIF, doing what I was referring to earlier about consolidating below resistance. So yes, there has been a 3X. It's gone from 20 to 60. You could say the easy money has been made. You could, but has it? How do you know, right? Sometimes it's obvious when you're looking at a coin and you go, oh yeah, okay, this is done, right? But in this case, maybe not. Maybe it pays to use your imagination. I mean, let's put it this way. If I say this is the whole buy the dip underneath resistance play and I'm wrong and you get stopped out below 50, okay, you know, as a guy I used to work with at Wall Street used to say, if I'm wrong, I'll lose money. You'll lose a little money. But if something like this explodes because the whole sector explodes and this thing takes out 63, you could be looking at 114 or 176. So my point is, if you're looking at metaverse or NFTs, as in NFT 2.0, as in stuff with utility, particularly in the metaverse, okay, that's not stuff that's launching on, you know, IDOs and the thing doesn't have a website or a white paper. Okay, not that, but stuff that's trading on exchanges could have parabolic run-ups. When I say hide and seek, I'm seeking stuff that I can get into low risk reward like NIF that could turn around and go to 176. Now, again, mixing good and bad. Orion Protocol falling below the 62% retracement at 723. Not excited about this. Why? Well, because that level held like 4 or 5 times and the bulls were not able to advance it. Okay? This is a classic lesson of, you know, don't be stubborn. If you get stopped out, you get stopped out. Seriously. Yesterday, Forrest, as usual, gave serious words of wisdom. I'll let him expand on it, but you have to take a short-term mentality sometimes in some coins. So if you get stopped out, you get stopped out. Okay. Oh my God. Sandbox. Why tune in to tokenmetrics.com? Because we've got analysts and AI that can help get you on trades like Sandbox. This thing went from 50 cents to $3, and I said, F it, buy the dip. Buy the dip in big cap metaverse. Why? Because every hedge fund is going to have to show on their books that they own something in the metaverse. And owning Facebook stock is not going to be good enough because this is where the alpha is. The market is going down and this stuff is going up. Now, should you FOMO into Sandbox at $4 today? Probably not. If there's a dip in Sandbox, should you try to get in? Yes. Particularly if they waste the market at the end of the week. Supports at 2.8. Okay. I don't want to say this is too late, but the bus may be leaving in all of this big cap metaverse. So I'm not advocating FOMO, right? So say it's trading at 4. How do you play it? How do you make money in crypto? Okay, well, let's say it's trading at 4 and you missed it and it goes to 6 and you're like, oh, God. Well, it may dip back to where it is at 4. It may be better to buy it as they're flushing it, even if they flush it back to where it is right now. Going back to my colleague Forrest, good trades, good sectors at good entry points. Okay, this is a redraw on Sandbox. So 425, okay, is the level I'm looking at. If it breaks through 425 and then comes back down, 885 could happen, and it could be much higher than that. Okay, remember, back in the day, Compound, right? DeFi 1.0, the first big DeFi coin to take off, went into like the top 5 or the top 10. Chainlink, same thing. You know, you woke up one day, Chainlink was top 5 or top 10. Theta, right? The video coin, you know, has disappeared from everybody's mind share. Okay. Theta was like top 8. So don't think that something in the metaverse can't have a parabolic ascent in market cap, right? I mean, somebody's going to win here. Mr. Market is going to price in the winners, right? This is like the internet trade back in 1999 and 2001. The market isn't going to wait to see who wins 10 years from now. The market's going to price it in all at once. That's what Sandbox is telling you. So do you FOMO into Sandbox at 4? Probably not, because that's resistance. But if it breaks and comes back down, like if you're watching this, you know, I don't know, 3-4 days from now, that's where you want to be. So if I could just take a brief break and people out there could give me some love for getting Sandbox right and hit the like button on the stream, it helps us so we can bring you more content, like all the things my colleagues are going to tell you in a minute, so we can help you. Hit the button, please. Okay? Decentraland, Mana, not doing what Sandbox is doing yet. 21-day moving average in this is at $2.70. This is a weird play. You know, you have big players buying the dip and probably smaller players taking profits as it rallies towards 4. Okay, obviously, you know, a huge market cap appreciation in this. That doesn't mean I'm giving up on it. Okay, in stocks, when you have these sector rotations, what you get paid to do is buy it when they run stops below the 21-day moving average. So if you get lucky and they take this down to 2.7 or they run stops to 2.5, get involved, right? If it takes out 4 and comes back and retest it, get involved. Not investment advice, but what I'm trying to give you is a trading strategy, a roadmap to how to follow and take advantage of what's going up, because we've been talking about a year-end parabolic. It may be in specific sectors, and it may be at the expense of the rest of the market. And that, friends, is the market update. Forrest, over to you, man.
Thanks, Bill. I'm gonna share my screen here, and hopefully this will pop up. We're gonna talk about how to make money trading crypto or trading Bitcoin. Lots of trade opportunities in the market, and there's something that you said there, Bill. If you get stopped out, you get stopped out. You cannot be, if you're going to trade, you're going to take a trading mentality, which I think is a good mentality to have towards the end of a bull market cycle. Why? Because you're jumping in and you're jumping out. You're jumping in. You're spending more time in stable coins, right? And less time in crypto, other than when you're in the middle of a trade. If you're letting your trade run and the market's doing well and you're long, great, you're making a ton of money. But when it's time to take profits on a trade, you're taking profits and you're getting out of the market, and you're sitting out when the market's potentially dumping. You're looking for entries at the bottom of these dumps, right? So I think a trading mentality, as long as you're following good risk parameters, right? Good risk management can be a fantastic strategy right now, right? So here's a trade that I've been talking about for a little while here. And I think this trade was fine to enter, even all the way up here at 63K, where we got us this initial support for Bitcoin, right? When we got this initial support for Bitcoin at around 63K, I think that was just a completely fine entry point. Why? Because our target here is $79,500. Let's talk about why I think Bitcoin can go to $79,500. Well, for one, we're in this big bull market. If I go to total cryptocurrency market cap here, yes, we're in a red week. We're in the middle of a red candle, which is on the back, by the way, of 7 weekly green candles, which when you get this bundle of green candles, right, even if it's followed by a bit of a decrease, and I'll zoom in here so you can see this back in all the way back in 2016, when you get this bundle, right, of green candles, even when it's followed by a corrective red candle or two, it usually precedes a big parabolic run up. And I think everybody's expecting some sort of big parabolic run up. We're getting a bit of a red candle here, but it's on the back of these green candles. Why do I think Bitcoin can go to $79,500? Well, we're looking for long opportunities in a bull market, right? Why look for short opportunities when the momentum is going up? So we want to look for long opportunities. But then why am I looking at $79,500 as a take profit point? Well, that's key resistance in the sense that it's where you can no longer go long on 2x leverage and hide your liquidation point against this big correction back here in Bitcoin's price down to $39,600, $39,700, right around here, depending on what exchange you're trading on, right? So if you can no longer go long on 2x leverage up here and hide your liquidation point down here, the buying pressure starts to dry up and it creates downwards pressure on the price of Bitcoin once it crosses that $79,000 threshold, right? We can see previous examples of this happen all throughout the history of Bitcoin so far in this bull market cycle. If you take the 2x margin pressure level off of this support level here, you get a perfect top up here at $58,000 where Bitcoin saw this big correction. Would have been fantastic to take profits up here, all right? So if we go over to our current price action on Bitcoin, we can set up a trade, right, with our take profit at 79,000, 80,000, 79.5, wherever we want to take our profits. We know there's going to be resistance up here, right? And like I said, I think even if you entered on this bounce at 63,000, that's a fine trade to take if you're taking your stop loss and putting it down here at about 57,200. And we're going to walk through why I picked 57,200. This is still a risk to reward ratio of 2.65. Now, if we entered down here on our margin pressure levels, right, our margin pressure level supports, this is these are the prices at which you can no longer, once Bitcoin goes above these levels, you can no longer go long at 3x or 2x leverage and hide your liquidation points against these corresponding support levels down here at 29.2, right, and 39.6, right? So we would expect as Bitcoin crosses this threshold, some buy pressure to start coming in. And I think we still may see a bounce here. We still may see some buy pressure come in because there's incentive to buy on 2 and 3x leverage, right? But why am I keeping my stop loss down here? Well, I like to take it 1% below our previous wick. We know that this is a strong support level, right? We know that this is a strong support level, and we've gotten support, right? We got our initial bounce off of this level. And I think buying at 58.5, even in hindsight, with a tight stop loss that's probably going to get stopped out here, buying here at 58.5 is still a good trade. Why? Because if our target is a bounce here up to $79,000, risk to reward ratio is 15.78. Let's just call it 16-1. That means that out of every 17 trades or so, you only have to be right one time, right? If you're wrong 16 times to break even, right? So out of 17 trades, you can be wrong 16 times, but if you're right once on this trade setup, you're still break even. If you're right 2 times on this trade setup at a 16-1 risk to reward ratio, you are extremely profitable. So it's okay, as long as you have the right risk to reward parameters, it's okay to get stopped out. It's okay that our stop loss down here is about to get hit at 57,200. Because if we get stopped out, guess what? We're going to find another trade setup with a favorable risk to reward ratio. Even if our target isn't 79,500 and it's more realistic, right? And we're getting a bounce. We're expecting some sort of a bounce up to this downtrend line, right? Our risk to reward ratio on this trade is still 2.5 to 1, which anything above 2 to 1 is pretty decent risk to reward ratio. For simpler math here, if we move this to a 3 to 1 risk to reward ratio, I'm going to show you how it works, right? If our price target, when we're right one time, gives us a 6% return, 6.3% return, but our stop loss down here gives us a negative 2% return, we can trade this 4 times. And as long as we're right one time out of every 4, we've broken even, because that one time we've made 6%. The other 3 times we were wrong, we've lost 2% each time, right? So you lose 6%, you make 6%, you've broken even. And that's only being correct 1 out of every 4 times. So if you get stopped out, it's fine. As long as you're not over allocating your capital to each of these trades. Yeah, if you put your entire portfolio in on one trade and then you get stopped out or get liquidated, yeah, it's kind of a big deal. You've lost your entire portfolio. But if you're following good risk management, which I'm a huge fan of, taking 1 to 3% allocations per trade, right? You're going to have between 33 and 100 shots at getting this right. And we know we only have to be right 1 out of every 4 times if we keep our risk to reward ratio at 3.0. Now, moving back up to this target of $79,000, I would say even right now, it's a pretty good entry. If we move our stop loss down below 52,700, right? That's our next support level and next big margin pressure level where we could expect a bounce. Right? A lot of people think there's bidders here at around 53.5. We could see a bounce even above this margin pressure level. Well, what's our risk to reward ratio here? It's 3.4 to 1. That means roughly out of every 4 times, we only have to be right less than 1 out of 4 times. That's a fantastic risk to reward ratio, and it's extremely justifiable. It's extremely justifiable to think that Bitcoin can go to 79K, right? We're in a bull market. We're expecting some positive price action. There's a Bitcoin spot ETF on the horizon that maybe could get passed. We don't know for sure, right? It's extremely justifiable. You put your stop loss down here, and guess what? If you get stopped out and Bitcoin comes all the way back down to 44K, look for another trade. Look for another long position. Look for the bounce off of this long-term trend line, right? Put your stop loss down here. So I hope this is helpful in understanding that if you're trading with stop losses, right, putting your stop loss in a position where it gets your money out of the market, it exits the trade before you lose, hence it stops the loss, at a good risk to reward ratio, it's okay to get stopped out of a trade. It is completely fine, because even if we get stopped out 3 out of 4 times, as long as we have reasonable risk to reward ratios and reasonable price targets that are realistic, you're going to make money. You're going to make money as long as you follow good risk management. Now, one thing that I do want to mention, if we get a bounce off of this level here, right? If the bids start coming in here and you're long, or you're just looking for a place to exit Bitcoin, you think it's going to go down to 53K. I'm a big fan of, let's just say we get a bounce out of Bitcoin, selling the downtrend retest line. Why? Because this is going to be resistance depending on where if and when we come up to test it. And it sets you up in a position where you can very oftentimes take profits off the table, de-risk, right? And play both scenarios. What scenarios can happen here? Well, one, we break through and test it as support on the way back up in a bump and run pattern. That's what we did over here, right? We look at our bump and run pattern. We had our downtrend line. We had our retest. We actually broke through it. You could have sold the retest line, right? Even though we broke through it, and then bought back in cheaper on support down here. And that's what's going to happen 9 times out of 10 whenever we break through a downtrend line. Right? So you can sell this downtrend line, buy the retest on the other side, buy the bump and run, and you've secured profits, you've de-risked, and you've gotten back in cheaper, right? Or at least at the same price as we go back up. Now, what's the other scenario? The other scenario is you sell the retest line and we start coming back down, and you can buy these support levels again, right? And then maybe we bump and run. So either way, you're de-risking in a downtrend until we've confirmed support on the other side, in which case you still get to get in cheaper, right? The worst case scenario of selling the downtrend line is that we just blow straight through it. And that's really unlikely to happen, right? Even when we do blow straight through these downtrend lines, very, very, very often, right, we come back down to get them. This. I'm going to take you to a flash in the past to when Elon Musk put Bitcoin in his Twitter bio back here in January of 2021. What happened? We were in this downtrend line. We were in this downtrend, right? If you sold the retest here, and we just completely blasted through on this news of Elon Musk putting Bitcoin in his Twitter bio, looked like a runaway freight train. It looked like the wrong decision to sell at 33K and de-risk. Well, we were in a downtrend, so you still got to de-risk, but then we still came back down. Even after going all the way to 38.5K, we still came back down to retest this downtrend line, giving you an opportunity to get back in. So this is how you make money in crypto, by trading and managing your risk and managing different scenarios. So we got a lot of people to get through still. We still got Mehdi and Micheal who have excellent segments. I'm going to pass it over to, I believe, Mehdi first.
It's actually going to be jumping over to me, Forrest.
Mike.
Nice to see you guys all today. Thank you for joining the stream. Just going to go ahead and share my screen here. So yeah, we just want to get you guys more exposed to what's happening in DeFi, specifically DeFi 2.0. And one of the more popular projects on Avalanche right now is Wonderland Money. And it's essentially a DeFi 2.0 protocol that's very similar to Olympus. So today I just want to make sure you guys are aware of it and how to go about buying it and exposing yourself to time. So we could go ahead and check out this website first. So this is the website, wonderland.money, created by a very top tier developer that's also created Abracadabra, Spell, and Popsicle Ice Finance as well. So if you go into the app here, bear with me for a second. I don't know why this is taking a while. Okay, we'll just go ahead and jump into my presentation instead. So to interact with a majority of these applications are, Web 3.0 applications, you'll need a MetaMask wallet. So first thing to do is, create a MetaMask wallet. And if you don't have a ledger or a cold storage device, it's always, smart to get that as well. Gives you an added layer of security. But yeah, initially what you want to do, create a MetaMask wallet. And then from there, you want to go ahead and then go create an Avalanche wallet. And you can do that here. If you go to Avalanche's main website, and you scroll down here, you can see wallet right over here. Click it, pops up. You create your own wallet. You could create a passphrase wallet or a wallet that's managed through Ledger Live. But yeah, after that, what you want to do is essentially just create that wallet, then go from that wallet to a centralized exchange. If you have an account there, I use Coinbase Pro, bought some Avalanche on there, and this Avalanche wallet here will give you 3 different addresses based off of Avalanche's ecosystem. So there's the Avalanche X chain, which is its native ecosystem, and then the C chain. So what you want to do is jump over to the C chain and insert your C chain address to your Coinbase Pro, and essentially withdraw your Avalanche from a centralized exchange onto this address. And by doing that, you'll then be able to send your Avalanche from your Ledger, your Avalanche wallet to your MetaMask. And how you want to do that is make sure you're on MetaMask, Avalanche network, connect to that. you could go into the Avalanche docs to get more information on how to get connected into that network. But after doing that, you'll be able to send whatever Avalanche you have on your Avalanche wallet from the C chain to your MetaMask Avalanche. But yeah, here's a clearer picture of that. This is the sending process. You want to take this address here for your MetaMask and insert it into this address here to receive it on your MetaMask from your Ledger or from your Avalanche wallet. And then after doing that, you can go ahead and go to traderjoe.xyz. It's probably the most famous DEX right now on Avalanche. And you can go ahead and just instantaneously swap your Avalanche for time there.
Mike, quick question.
Yeah.
Can you go from Coinbase to MetaMask using, can you send Avalanche from Coinbase Pro directly to your MetaMask? Or do you have to go from Coinbase Pro to the Avalanche wallet and then to MetaMask? Asking for a friend.
Yeah, I believe you can. It just, a lot of exchanges, for example, if you have Avalanche on crypto.com, you might run into the chance of not getting your crypto or getting your Avalanche because you're on the wrong network. So the reason why I prefer going through Coinbase back to Avalanche wallet is because Coinbase, all the coins are on there are ERC20 coins. And by doing that, it just gives me an added layer of security. And I'm sure that it's going to end up in that wallet.
Now,
I've had some.
Go ahead. No, finish.
Yeah, I was just going to say I've had some troubles in the past, going from centralized exchanges that I thought were ERC20 only, but then I lost that.
Lost the tokens.
Yeah.
So
unfortunately.
it's also important, just to reinforce the point, to go from, say, Coinbase Pro and make sure you're on the Avalanche. I don't know. Did you call it the C chain?
Yeah. So you go to the Avalanche C chain. Essentially, what you want to do, just make sure you have the Avalanche wallet set up, and you can go send your.
And it's important. It's important to be on the C chain because that's what helps you connect to Trader Joe. Is that right?
Yeah, it helps you connect to Trader Joe as well as Ledger Live because majority of the applications are still running under Ethereum. That's what C chain is. It's Ethereum compatible chain for Avalanche.
Okay.
But yeah. Once you are able to send your Avalanche from your Avalanche wallet to your MetaMask, then you'll be able to essentially jump onto Trader Joe. And here's the website here.
So the C chain is compatible with Ethereum, which is how you can get Avalanche into MetaMask. Does that make sense? Did I get it right?
Yep.
All right.
That's exactly how it is. And from there, once you're able to get that Avalanche onto your MetaMask, then you'll be able to interact with Trader Joe using your Ledger Live if you have a Ledger Live application. And to do that, actually, I just want to make sure you guys are aware of this. You need to have your open device WebSocket open for your Ledger Live to be interactable with Trader Joe and Avalanche's C chain. But yeah, so what you want to do?
So let me get. Oh, go ahead.
Yeah. So after that, essentially, you just want to jump onto Trader Joe. Swap your Avalanche for some time. There's a sample transaction I just did for you guys here. And then you can jump back into time, the main dashboard here. And you can see, the APY is pretty insane, 90,000% right now. And once you have your time, you can just go ahead and hit stake time. And then that transaction will get processed under the Avalanche's network. And, the cool part about being on Avalanche is the fact that the fees are, next to nothing. But yeah, I started dabbling around with time, let's say about 2 weeks ago. I went from 0.09 time just to try out the platform all the way up to 0.015 time. So I've made close to $600-700 in interest in the past 2 weeks just dabbling with time. So I just want to make sure you guys are aware of DeFi 2.0 and what's going on and how you can put assets to work and not necessarily have to know much about farming and all this degen stuff, and just go ahead and use Wonderland and these DeFi 2.0 platforms like Olympus.
All right, Mike, thanks a lot. Just a brief note for our producer, more information to pass on to my friend. Our producer was actually able to go from Coinbase Pro to Metamask with Avalanche. So my recommendation for newbies out there is to, go slow with this. And I know somebody just commented that, this can get really complicated. Okay. Damon out there was saying this. Yes, it is complicated. All right. But you have to remember, you hear me bloviating, hosting the show, right? I'm helping you learn, but you have to ask yourself, who's helping me learn? The answer to that is the gentleman that you just heard talking. Okay. That's Mike. He does our small coin stuff. Okay. He hit Illuvium when it wasn't much before Mike hit Illuvium, found Illuvium, and then our AI picked it up. So for our sponsor, tokenmetrics.com, that's where you want to be, because when you're with Tokenmetrics, not only do you get Mike, but you get the AI that can confirm that Mike's right. So if you like Mike, hit the like button. Mehdi, are you out there, man?
I'm here.
All right. I like to tell people Tokenmetrics is a roadmap for people in crypto. And one of the other days, I was piloting the idea that we're the smartest people in crypto. Okay. We may be the smallest, but I think we're the smartest. And now I'm about to back it up and turn it over to Mehdi to hit us with some smarts. Go.
Yeah, before I jump into some of the deep dive projects we have done, I want to quickly share. 1 second. Yep. Can you guys confirm if you can see my screen? Yeah. So I just wanted to share how I use Tokenmetrics platform for my own facility as well before I delve deeper into some of the things. So I'm more of a fundamental analyst, I focus on fundamentals. So my time horizon in terms of investments is very long. So what that does mean is that, let's say if there's a short-term opportunity and I want to have a turnover within my portfolio, how do I make money? So one of the things I do is I have like a separate amount which I kind of dabble with in terms of like short-term trades, and I use Tokenmetrics platform. And the reason I do that is because I'm very confident the quants we have, the data scientists we have, they work on very complicated and sophisticated model when it comes to whether it comes to trend following models, mean reversion model, momentum models, and they have been producing good results. So if you see over here, KuCoin, within last 6 months, the returns have been 437%, outbeating Bitcoin. So Tokenmetrics not only gives you TA, which my colleagues Forrest and Bill cover brilliantly, but we also have this quant side of things, which I think some of our customers should leverage. Apart from that, recently we have also done analysis like deep dives, very, very thorough deep dives on some projects which have done well. So this was the last deep dive we have done last week on Polymash, and I personally am invested like a small portion of my portfolio. And when we kind of invest in these portfolio, when we kind of do research, we go thorough. Like we make up an investment thesis, we look into the teams, we look into the audits. If you just look at the report size, it's 20 pages, and even before we kind of start writing this report, we have Micheal, and we have a whole blockchain research team that kind of helps us. So blockchain researchers, they kind of do the code review, they help us audit the code, and then Micheal before that kind of helps us find these hidden gems, and then I come in and do the deeper dive. So it has helped me personally since I've joined Tokenmetrics in terms of my own portfolio. So I'll give you one insight on this. So I have been invested in moonriver since it was $70. Now it's around $350 to $400, and we were early on this, and we showed some of our customers that this has good potential. and we covered a lot of things. Like we covered the investment thesis, we covered token economics, we covered valuation. Now this is something which you don't find in any other products. Everybody wants to buy a project, but sometimes you have, even with a good project, you need to pay the right amount. So at Token Metrics, we also kind of are very focused on the valuation of the project, and we were able to kind of decipher that the valuation of moonriver was very cheap in terms of what they're trying to do, and we were able to make our customer 3x. And I was also fortunate enough to make a lot of money myself. This is how some of the ways we are kind of making our customers money and also ourselves money. This was another project which our customer were able to do 2 to 3x. It was convex finance, DeFi 2.0. So even before DeFi 2.0 became hot, we were able to kind of get into it. So we did financial analysis, valuation, we had tech scores, we had we did everything we can. Like we even look at the competitors, and you can like see how detailed we went in before recommending it to our customers. And then we also had TA, our colleagues here, Bill and Forrest, kind of helps us with the TA. Then we also have the blockchain research team that helps us with the code review. So yeah, I feel like if the bear market comes in, one of the best platform for you guys to onboard is Token Metrics, because you get quant, you get fundamental, you get the technology, and then you also get the technical analysis. So you have like all-in-one package, which I think will help you in the bear market. Speaking about bear market, if you are concerned that the bear market would be lasting, and you are very concerned and you want to risk-free trade, and you basically want to earn 20% interest whilst not being worried about your money going down or anything as such. One of the things I put my stable coins in is Anchor Protocol. It's a Terra Luna based project. It's based on Terra ecosystem. And if you look at the interest rate in US, it's 0.5%, 1%. Okay, inflation hits, we get 2%. Now, this is 10x more than that, right? So if you are concerned about a bear market and if you want to protect your portfolio, you can put your stable coins here for 20% interest. And then if you're also concerned that, okay, there are legality issue, it's a stable coin, what if they run away? You can also get insurance. So let's say Unlash is one of the platform that also gives you insurance for the UST peg. So let's say you give up 1.8% of your interest, still get 18% interest, by the way. You can still make a lot of money and protect your portfolio. So if you're preparing for a bear market, I think apart from Token Metrics helping you, I think Terra project Anchor is also one of the ways you can leverage it. Now I have personally invested in this one, and I believe having 10-20% allocation towards stable coins in terms of your portfolio in this market condition makes sense. So why not just earn interest on that as well? So now let's also talk about some optimism. So I'm going to share some thoughts on one of the NFT marketplaces that I'm very interested in and which I'm observing very closely. I mentioned this to some of our professional clients a few days back. So I'm going to share some of those ideas and thoughts with you guys as well over here. Yeah, so one of the projects I'm looking at the current moment is Infinity. So before I delve deeper into Infinity, I just want to kind of remove all the misconceptions about NFTs. I personally feel NFTs are not just JPEGs; they represent much more than art. For me, one of the biggest themes I'm interested in and I'm very bullish on is gaming items and entire virtual worlds. And I believe that's the biggest application of NFT, in my opinion. And Infinity is kind of going after that. So that also makes me bullish with regards to Infinity. Also, just to give you a sector trend in regards to NFT, I feel like it's way too early to take concentrated bets on single NFT out of like a batch of 10,000. I think only 1% will become part of blue chip and part of culture, and 90% of them will lose value. But that doesn't mean that NFTs are useless. I still believe they represent a credible opportunity when it comes to culture, when it comes to metaverse and gaming. So how do you kind of play that, right? How do you kind of play that in a way that's asymmetric? You make money, but also don't lose money. So for me, I think the best way to kind of play that is to invest in NFT marketplaces, and also not just any marketplace. those marketplaces which kind of produce NFTs that are accessible and compatible across chains and can communicate with each other. So we are entering in a realm what I call is multiverse. So multiverse, I think, will be a very important feature of metaverse, where you'll have multiple chains. So having an NFT exposure in a multiverse is very important. So this is where Affinity comes in. So it scored really well on our fundamental scorecard, and also scored really well on technology scorecard. It's being built on Polkadot, and it's one of those marketplaces which can communicate with other parachains in Polkadot, and also with other blockchains outside of Polkadot. It kind of solves some of the issues we are facing with Ethereum. Right. So it has low fees, it has fast network, and it has flexible smart contracts and interoperability. So at the moment, Affinity can process 1,000 transactions per second, and has more, and basically it has 6 second TPS. While if you compare with Ethereum, it takes much longer. And there are other unique features which Affinity is introducing. So one of the features is feel as NFT. Just imagine you are in a game, you're playing a game, and let's say after completing a mission, a game developer wants to gift you an NFT. Whilst in current blockchain, what happens is you have to pay a lot of fees, right? You have to pay minting fees, gas fees, and stuff like that. So what if there is a mechanism where developers kind of subsidize these NFTs, and gamers do not have to worry about exchanges going on an exchange, going on and getting a wallet, knowing about crypto. They can just have NFTs just in the games, right? So this is what they're also trying to achieve. They're trying to create feeless NFT by having a fuel tank which developers subsidize. They're also trying to create like a DeFi for NFTs. They're creating a AMM. Where people will be able to swap NFTs. They can swap NFTs from Ethereum and basically bring it to Polkadot and swap it. So I think it's very interesting. And also they're trying to create price discovery mechanism where you get Affinity coins if you kind of predict what the correct price of an NFT would be. So I think this will improve a lot of liquidity issues we have in NFT, and we'll also know the true price of what a particular NFT should be for. So I think it's very interesting. And they're also creating this crafting mechanism within games. So let's say you have some embers and you have some fire and you have some wood and you have one sword. What if you can combine all of these NFTs and all of these tokens to produce a rare NFT or rare gaming item? So they're also kind of building those mechanisms for developers to kind of implement in gaming. So yeah, all in all, it sounds very exciting for the NFT future with Affinity. I also love the team. The team who created Engine Coin is the one who is creating Affinity, and I would say they are the Vitalik when it comes to NFTs. They were the one who created ERC 1155 standard, which is where all the gaming NFTs utilize. And all of the team members involved, they understand and they have vast experience in gaming as well. I think the first Minecraft server was kind of created by Celeb Applegate. Like he created the first marketplace for Minecraft. So I thought that was very interesting. And of course, you also have amazing investors involved, like top-notch investors in terms of Hash, Fembushi, Hashkey, Block Tower, XRP. So yeah, good values in terms of. So these investors know what they're doing and they have already invested in this project. So that also makes me more bullish. Now I can bore you guys with further details like let's say tokenomics and things like that, but just because we don't have that much time, so I'm just going to just tease you with all of this, and you can see the complete presentation at Token Metrics TV. So I hope you guys enjoyed today's presentation. Let me know if you have any questions.
All right, Mehdi, thank you. That puts the capital S in smart. Okay, Nicole, thanks for the love on the show. Paris was asking, is this the bear market? Well, how do you distinguish from a bear market and everybody in a big hurry to take profits, which runs the stops of people who FOMO'd in? Well, you don't, but as long as there's still something going up, it may not be the bear market, right? In a bear market, everybody loses. Bulls lose money, obviously. Okay. Bears lose money, Not obviously. In other words, bears get short or try to hedge and then get stopped out by enormous bear market rallies. Now, speaking of enormous bear market rallies, let's be mindful. If this decline continues past November 21st, okay? Because again, I don't have a crystal ball, even though I try to act like I do so I can help you. If this thing continues to go down and then all of a sudden you see the market go up 20% in one day, right? So if it's down, 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 oh my God, it's the end of the world, down again, and then up 30%, that's bear market price action. Right now, this just looks like a blowout and sector rotation. Now, somebody was asking me if the Olympus Wonderland model is too good to be true and is sustainable. So I can tell you two things about that. One, you're giving someone ETH and they're giving you a new experimental currency. That's how I kind of understand it. Okay. So you're getting paid to take risk because you're giving them ETH for their treasury and they're giving you something that's, I don't know, a couple months, couple years old. It's not ETH. It's not US dollars. It's not Bitcoin. So when you're getting paid that type of APY, yes, you can ask if it's too good to be true, but you can also say, okay, I'm getting paid to take risk. What risks am I taking? In other words, for example, if the SEC comes after DeFi 1.0, can they go after Olympus? Now, don't get alarmed. I don't know the answer to that. Matter of fact, during this live stream, I DM'd one of our analysts and I said, get to work on this. Figure this out. Is there regulatory risk in those coins? Now, maybe not. You know why? Because it's too complicated. Like, if it takes our sophisticated analytics team multiple live streams to be able to articulate it, teach themselves, and then teach you, it's a good chance the SEC doesn't understand it. They attack what they understand, which is why they went after Uniswap. So Uniswap's been around for like, I don't know, what, 2-3 years? And now all of a sudden, they're going after Uniswap. So that other stuff as an experiment, meaning Olympics, Wonderland, may be sustainable because, you know, the SEC wants to go after a bigger chunk of the market. That's why I think it's interesting in crypto that tech-savvy, smart people, okay, the guys who were into DeFi before DeFi was a big thing back in 2020 are now headed for Olympus and that ecosystem. So that would be my answer to that question about, is it the bear market? You know, is it sustainable? Okay. One person said, Crypto Burger says, AVAX is not ETH. Okay. That's an interesting point. AVAX is not ETH because ETH is a cryptocurrency. Okay. Inflation is out of control and there's $5 trillion sitting on the sidelines waiting to get put to work somewhere. So if they kill this market and everyone panics, remember, when everybody is euphoric and wearing a lampshade on their head, sell. When everyone is panicking and going, oh my God, I'm afraid this is a bear market, I'm leaving crypto forever, that's the buy point. Sell lampshade, buy rage quit. Friends, I want to thank our panel and I want to thank our sponsor, tokenmetrics.com. If you need guidance and you need to make money in crypto, then you need tokenmetrics.com. I saw somebody in the comments say, if I get tokenmetrics.com, will I understand it? In my opinion, yes. Okay? So with that said, if you need our help, come be with us. YouTube 5 days a week. Okay? Tokenmetrics.com updates 24 hours, keeping you posted. This is Bill Noble on behalf of my colleagues at Token Metrics. We will see you when? Tomorrow. Have a good day.